we started the year with a very strong pipeline, and we're ending the year with a very strong pipeline. Just taking a step back, this pipeline has a lot to do with the VC ecosystem. Over the last 4 or 5 years in India, you've had a very large number of new ventures created, and many of these ventures are now looking for growth capital, and that's what positions us extremely strongly. And as a result, we've had a very strong deployment year. So this year we've made overall 5 investments as a fund and 4 new investments from Gaja Capital 3, the third fund. So it's been a strong year, and we're closing the year on a strong note and hoping to continue this momentum into 2018. We've invested very consistently over the last 12 years in 3 themes: education, financial services, and consumer. We see these as very strong, deep, secular trends that will last for another 20 years. So a significant part of our focus continues to be on these 3 investing themes, namely education, financial services, and consumer. Over the last couple of years, you would have noticed that we've also expanded our interest areas to include pharma, healthcare, and technology. We haven't invested there yet, but we are reviewing, and we continue to review a number of opportunities in these areas. We have significant capabilities. If you remember, our predecessor firm, the View Group, was one of the pioneers in IT-related investing, and we think from a domestic consumption perspective, the tech sector in some ways is coming of age, so it's high time for us to start reviewing opportunities there. So we're also spending some part of our time reviewing opportunities in pharma, healthcare, and technology. But the significant focus remains, as has been, on education, financial services, and consumer. 10 years ago, our business was significantly or almost entirely about buying minority positions. 100% of our business was buying minority positions, which we classify minority as less than 25. Interestingly, today, a third of our business is controlled, a third of our business is significant minority, and a third minority. So one big trend for us over the last 12 years has been how we have consistently moved in the direction of owning larger stakes, albeit in growth situations. So we continue to invest in similar kinds of companies, but we are buying larger stakes than before, and in certain cases we are backing management teams to do buyouts. Arguably we've done at least as many, if not more, buyouts in the mid-market space than many of our peers. It's been an exceptional year overall for us, and including for exits. As I mentioned, we made 5 investments this year, and we've made 3 exits this year. Our exits have been from Career Launcher, Distilleries, and TeamLease, and each one of these has been diverse. One has been through an IPO, John has been through a strategic sale, and TeamLease has been through a secondary purchase in the markets. As you know, in TeamLease, T. Rowe Price purchased a stake in TeamLease from us. In John, Sazerac came in as an investor. So we're I think we're pleased with our results. We've delivered capital and returns to our investors. For the industry as a whole as well, I think 2017 has been an exceptional year.